What is going on, investors? Hopefully you guys are doing well out there. On today's video, I'm going to piggyback off a video that I posted a couple of days ago where we're looking at a chart at the S&P 500. We're looking at charts of the NASDAQ. We're looking at charts of Meta stock. And man, these stocks have started to go straight up in the air. And what we know about stocks that start to go up really rapidly, very quickly, is oftentimes gravity takes over. And we have chances at pullbacks. I would think over the next 6 to 8 weeks, you should have pullbacks in the equity markets 5 to 10%, and that will create a great buying opportunity. And some people call it, quote, buy the dip. Now, before we get that opportunity, I just want to make sure we're prepared. So on today's video, I'm going to give you the 3 rules around buying the dip. And this is going to help you likely over the next month or two when we finally get this pullback in the markets. If you follow these 3 rules, I think you'll have much better success buying the dip in a lot of these stocks or the stock market. Now, the first rule is have a why. Have a very specific why you're buying the stock. I think a lot of us that are kind of in the trenches in the stock market, just over the years, it's more or less a habit to buy stocks. Maybe we have automatic investments in a 401k or an IRA, or we just maybe get a payday or a tax return or something, and we toss a little bit of money in the stock market. I think that's great. I'm not telling anybody not to do that, but what I'd like you to do is take it a step further. Have a very specific why. Why are you buying this stock? Why are you buying Meta stock? Why are you buying Nvidia? Why are you buying Google stock at this time? I would have very specific targets. It could be that it's just a retirement thing and you're just looking to buy the stock now and in 25 years have a larger nest egg so you can retire and not have to work your whole life. But I think even better than that is have a very specific why for that money. Maybe it's to make, you want to buy the stock today, and once it reaches a certain price, you're going to sell it and do a home improvement project on your house. Or you're going to have this stock and you're going to watch it run up, and maybe you're only going to sell a portion of it and then go buy your son maybe their first bicycle. Or you're going to take the family on a vacation. You don't have to sell all the shares, but maybe take a small portion of it and say, when Google stock goes from 100 to 200 over the next 2 years, I'm going to sell this small chunk and I'm going to take my family to Hawaii, or we're going to go camping or something. Have a very specific why. It's going to laser focus you and it's going to make you make better decisions. When you have very specific goals and targets, that often is a great way to have better results. Now, number 2, plan your buying in advance. Let me tell you what, okay, the stock market's ripping higher right now. Everything's all good. It's almost like bad news just slides off the back of investors. But when markets start to reverse, that is when the bad news that's happening in the Middle East gets a little bit more noticeable. You'll also have interest rates. Also, that national debt, every time I look, it only seems to be going upwards. Maybe the job market starts to get weakened and we start to see people lose more jobs. It's an election year, and I think we're just getting started in terms of kind of the heat and the rhetoric and the back and forth that you're going to have there between both factions of each party. When the stock market starts to reverse, man, that ugly news is easy to listen to and it's easy to digest. So make sure you have your levels in advance. I like to pick levels if it's an individual stock, say it's at 200. I like to pinpoint a very specific level and say, I'm going to step in here at $180. Now, I might not step in with all my money at $180. What I like to do is identify how many shares I want of a company. Say I want 10 shares of a company that's at 200 bucks. Well, when it pulls back to 180, I make the decision in advance and I write it down. I say, I'm going to buy 2 shares when it hits $180. And if that stock continues to move lower to 170 to 160, I incrementally buy more shares. But the most important thing I did there was I planned it out in advance, because like I said, when these markets reverse, and it's not a matter of if, it's when, the news is going to be bad on the mainstream news, on the financial news, on the Twitter, on the Instagram, and the Facebook, and everywhere you look, the news is probably not going to be good. But history has proven when the news and the turmoil around the stock market is at its worst, that is often one of the best times to step in and buy. Now, number 3 is probably the hardest thing for most investors to understand. is when you are selecting the stocks and the indexes that you want to step in and quote buy the dip on, you are only going to buy stocks that are in an uptrend. And probably the simplest way I explain this to people is using a real estate example. Let's assume you're out there and you're a real estate investor and you don't care about the property. You're not going to live in it. You just want to get it for the best price, rent it out, and make some money over the long term. You just don't want to get stuck buying a condo for $200,000 and a year later, now it's worth $100,000. That's a big paper loss, and you certainly wasted some money, and you could have done a better job investing and timing that investment. Well, one way you can get better at timing your stock purchases is actually only buy stocks that are in an uptrend. And the real estate example I give people is, let's examine some condos that are in your city, and let's assume all these condos are the same. There's nothing different about any one of them. So the price you pay is not related to the amenities or the view or anything like that. They're all the same. And let's assume 1 month those group of condos is $200,000, and then the next month they're $180,000, and then the next month they're selling for $170,000. Well, now they're sitting at $170,000. What gives you the confidence that that is the low, that's the bottom, and that the next month they're going to go up? The truth is, there is nothing telling you that those condos are going to go up in value anytime soon. That is because month after month after month, buyers are stepping in at a lower price. And that is the definition of a downtrend. The start of an uptrend would be if buyers come in at $175,000 for those condos, and then the next month it's back to $180,000. That is the start of an uptrend, and that is where we are trying to buy stocks. It doesn't have to be the start of an uptrend, but to give you two examples of stocks that are in opposite directions, I'll put up a chart of PayPal, and you'll just look at this chart and just assume you don't know the ticker symbol of the shares and you know nothing about PayPal. What can you tell me about this chart? I think most of you will identify that this chart looks like the side of a mountain, and it just looks like the price of PayPal continues to go lower and lower and lower. And anybody that has been buying the dip on PayPal over the last couple of years is underwater on their investments. And the primary reason for that, it has nothing to do with PayPal. It has to do with rule number 3, is you didn't wait until buyers stepped in at a higher price. Now, contrast that with probably the quintessential stock that has simply only wanted to move higher over the past year or so, and that is NVIDIA. Yes, there's been moments where NVIDIA has sold off tremendously, but you can see clearly defined areas where buyers have started to step in at higher prices. And those are the moments, and these are the type of stocks that, like that condo example, are having buyers step in at a higher price. Until you see that, until you witness buyers step in at higher prices, you have to assume that the chart of the stock will continue to move in the direction it has been, because there is truth to an old saying on Wall Street: the trend is your friend until the bend at the end. Hopefully you guys enjoyed today's video. We'll be back later today with more. Until then, good luck with your investments.